Welcome back to my channel MB Capital Strategies. After looking at Tongala, today we're going to take a look at an Australian coal giant, Whitehaven Coal. This is a company that may not pay the highest dividends, but it has an extremely robust balance sheet, steady cash flows, and pursues a clear growth strategy. I originally became aware of Whitehaven through Tongala when I increased my position in Tongala. Both benefit greatly from the global coal cycle, but are strategically positioned very differently. Whitehaven Coal is one of the largest independent hard coal producers in Australia. The company operates several mines in New South Wales and Queensland, supplying both thermal and metallurgical coal, that is, coal for energy and steel production. Important, over 80% of exports go to Japan, South Korea, India, and China. This ensures predictable demand from Asia, where coal is still needed despite the energy transition. Listed on the ASX with a market capitalization of around 3.2 billion Australian dollars. Market capitalization of around 3.2 billion euros. Now, as always, let's take a look at my entry price. My entry was at €3.11 per share. In total, I bought 20 shares. This corresponds to a total value of €62.14. Currently, I have an unrealized gain of 19% and a dividend which I have already received of 50 cents. I know that's just a small fraction. As I already mentioned, my primary focus is on Tongala simply because of the dividend. This is an additional player with that focus. Why my position here is so small, I'll explain to you at the very end. This is partly because I am already very well positioned in coal and don't want to overweight this sector in general. The 52-week high and low are between €2 and €4. Currently, we're at €3.68. The analysts have set a target here of €4.20 and InvestingPro at €4.87. Now for the financial key figures and fundamentals. Revenue for 2024 is around 2.38 billion. The forecast for 2025 is 3.26 billion. The operating result is 360 million, and in previous years we were sometimes over 2 billion. Net income is at 362 million, up from 221 million in the previous year. The PE ratio is 8.4, significantly below the sector median. EBITDA for 2025 is 1.757 billion. The EBITDA margin is sometimes over 40%. Here we have an equity ratio of over 60%. We have total debt of 1.13 billion. Of that, about 1 billion is short-term. Free cash flow for 2025 is at 327 million after several years of strong cash flow growth. So Whitehaven is no longer the dividend sprinter like Tongala, but rather a stable cash flow generator with a conservative financial policy. And this is also reflected in the payout ratio at 27%. So they are deliberately paying out less in order to have more leeway for investments. Now let's take a look at the dividend profile and capital policy. The dividend yield is currently around 2.3%. Long-term stable distributions. Since 2017, we've been between 4 cents and 25 cents here. High payouts, such as in 2022, amounted to 25 cents per share. Again, this was during the same period as with Tongala, so in 2022. Management places a strong emphasis on cash discipline. When coal prices are high, capital is returned to shareholders through special dividends and share buybacks, and in weaker years, cash is buffered. Now let's move on to valuation and fair value. According to InvestingPro, the fair value is between 4.87 and 10.3 Australian dollars. This corresponds to an upside of around 30%. So the company is currently trading at a discount of about 32%. DCF models, revenue and EBITDA exit show the following. Revenue growth of about 6% per year until 2030, an EBITDA margin of over 40%, a discount rate between 7.5 and 9%, and terminal growth between 1 and 2%. The valuation clearly indicates an undervaluation at the current cyclical low. What about return on equity and profitability? Return on equity averaged 19% over 5 years, and in peak years it was over 50%. We have a cash flow rating of 3 out of 5 and a profitability rating of 3 out of 5. We have a price momentum of 3 out of 5. So overall, this is a solid mid-level quality with clear strengths in cash and balance sheet structure. What is the current state of the market environment and coal prices? Whitehaven earns its profits from thermal coal and metallurgical coal. At coal prices above $140 per ton, the company is highly profitable. Even at prices between $90 and $100 per ton, it remains in the black. Below that, margins are squeezed, but it is not a loss-making business. According to internal estimates, the break-even price is around $75 at $75 per ton. Export demand from Asia remains stable. Japan and South Korea have long-term purchase agreements. India and Vietnam continue to rely on coal to secure their energy supply. At the same time, global investment activity in new mines is declining. This means that a future shortage is possible here, as I already analyzed in my video on the commodity supercycle with reports. Before we take a look at the opportunities and risks, let's quickly look at the chart here. Here we also need the Newcastle coal futures, just like Tungala. Currently, we are at $107 per ton. At its absolute peak times, the price was around $488. And at the lowest points, it fell to $49 or $48 per ton. Just so you can get a quick overview. And here, 2022. Accordingly, there was also this special dividend both at Tungala and at Whitehaven. Now, the opportunities: we have a strong balance sheet, we have high liquidity, which means security in the cycle. We have takeover potential in the Asian Pacific region. We have a DCF undervaluation between 30 and 50% and long-term favorable demand for high energy coal. What are the risks? Coal prices can fall by 30 to 40% in a short period of time. We face political and regulatory pressure on Australian coal exports. There is exchange rate risk between the Australian dollar and the euro when it comes to dividends. The current dividend yield is around 2%, not as high as with Tungala. If you also want to use InvestingPro for detailed fundamental analysis, you can get 15% off through my affiliate link. Macro and supercycle context. If we look at a commodity supercycle from 2026 to 2028, Whitehaven coal will play a crucial role. The supply of energy and industrial metals will be tight worldwide. If shortages occur, access to coal investments could be reopened. That means banks and institutional investors would return. This would massively benefit Whitehaven. My personal conclusion: personally, however, I am primarily invested in coal through Tungala. Therefore, I don't hold Whitehaven for its dividend yield, but rather as a strategic addition to have exposure in the Asian and Pacific region and to benefit from potential price upswings. That was Mining Stocks Part 2. In this series, I will generally cover everything, of course, including gold mines, silver mines, iron ore mines, copper mines, and everything else, including uranium, among others. So it's going to be a very long, very extensive playlist, and there will also be many videos coming up in completely different areas, such as the refinery sector, where I am also very active. Just so you know in advance, I think there will be about 2 more coal mining stocks, and after that we'll move on to the other mining stocks. Just so you know, we're not only covering coal here, but really all types of mines. Thank you for your attention. I hope you'll join me for the next video as well. Feel free to give the video a like and subscribe if you haven't already. Until then, I wish you successful investing.